Good morning. Welcome to the Forex Academy War Room podcast, The Winner's Edge. I am Darrell, and together you're listening to this just like I'm making this because we're both trying to make money in the Forex markets. This is a $7.5 trillion daily traded market. Bigger than everything, man. Okay, so my goal here in this podcast is I'm going to briefly go over what happened this week, which is really not too awful much, and that'll take just a minute or two. And then I want to focus on using momentum on the daily chart and waiting for a hook to develop after the market or after momentum's either high or low or divergent. And so let's get started. This is a loss we took yesterday morning, and we took it from a triple top and engulfing candle. We had the hook. We had momentum high with the hook, and the market did not agree with us, and it went up to the next level. So we're currently watching it here for another possible reversal. You can see we're getting another hook here, but we need solid rejection up in here. And so you'll hear me say that all the time, man. I mean, that's what we do. We're looking for rejection on structure, and structure has to be at some kind of a support and resistance zone, or on reversals. It doesn't have to be, but it's got to show super strong rejection. Yeah, okay, so that's our loss here. Was it this one? Yeah. So here's the win that we took, and we just took that this morning. That was a 2.5 R to 1. When we take a loss, it's 1 to 1, and then our wins are at least 2. Okay. So the ones that we're currently in live is the Australian dollar to the Japanese yen. And we got into this one several weeks ago. It's just kind of not, it's trying to figure out what it wants to do. We're asking a lot from this market. I'm looking for 12 to 1. And so we think that it's going to go down quite a bit. And so we'll just wait and watch. So, no, already had that one. No, I didn't either. Yeah, this is one we just got in yesterday, and we're looking for 4 to 1 on this one. We're pretty certain this one's going to go down. Look at momentum, and again, this is part of the lesson in this podcast is the hook. Momentum using the red K EURCHF. If you don't have it, you should probably get it and at least look at it and put it on a daily chart. You'll be doing and seeing exactly what I'm seeing, and that's what you need to do. So it also kind of makes a difference on how you set up your chart. So if you're looking at that, or if you're looking at that, I like to look at something very similar to this, 1 or 2 clicks, and that gives me a very clear picture of what's going on. And so this one, again, 4 to 1, we're just going to wait, see what happens. We had a limit order. What the hell? Oh, the limit order was on euro to the dollar, and I put that on yesterday. I posted that we were watching it, and so when we got this rejection candle, then I put my entry up here, and I just think the market's too low now to really do anything. We'll see. If it comes back up here, I might reconsider, but and that's really it. Okay, so now let's go over, and there are several markets that we're watching. Maybe I should show you that real quick. Give me just a second. That's kind of okay here. So the dollar to the Canadian dollar. Yeah, look at that guy. We were watching this for a possible reversal. Obviously, we did not get any rejection here. So we're going to watch this one closely because that is just one hell of an impulsive move up. We only got one red candle in the last month. So looking pretty good there. We're watching it. And Australian dollar to the Swiss franc. There we go. Okay, so this one, we're thinking this one might be trying to go down. Don't really know. We do have confluence here, and we have a resistance zone here, support zone here, so that puts it in consolidation. And at the top of the consolidation is right where the intersecting line for the upward trend is. So that is confluence. So we'll see. We need to see strong rejection. And again, that's part of it. That's part of the rules. You don't don't trade unless you have structure. Don't trade. Don't trade unless you have momentum with you. Don't do it. Okay. So now let's get to, I'll just start using this one. So I'm going to start, just kind of going over momentum. And once you start looking at this like I'm doing, I'm sitting at my desk in my office, at my home, in my home office. And, fortunate enough, I'm able to spend some time in the morning to do this. I'm self-employed and as a handyman. And I love doing that, but I would rather do this all the time. Anyhow, so you see how momentum is low here and then made a hook. Okay, that corresponded with rejection at this level. Then for profit targets, I place my profit targets at the next obvious level, and then I adjust my entry based upon that. Stop losses first, it's ATR plus 1.5 using the swing low or high as a starting point. And then profit target is wherever the obvious next level is. And if my entry is a market order, great. If I have an acceptable profit target, then I'll go in at the market. If I do not have an acceptable profit target, then I will do a limit order and I'll put the entry where I want it. And if I get filled, great. If not, great. Either way, it just really doesn't matter. There are so many opportunities in these 24 markets. It's unreal. So, okay, so did I even explain the hook on that one? I got tied up in something. Okay, here, look at this. This is a 3.7R win and pullback. You can see the support level right here, even though I don't have it marked out. See the support level? And then we had rejection right here. There's a really nice, both of them are technically engulfing candles, but this one really is. And it lines up with momentum being low. Right? Look at momentum's low and it made a hook, right? Going up. That's what we're looking for. And I always try to go with the 50 EMA, and that seems to work. That's why I have the 50 EMA on my chart. It's not a hard, fast rule, but it is something that I try to do. I want to stay with the trend. Okay, let's pick another one. Australian dollar, Japanese yen. That's one that we're currently in. And I can show you here, there you see an engulfing candle, which is rejection. So we had a pullback into a resistance zone. We had a really nice engulfing candle, and you look at momentum. Momentum is divergent, and there's the hook that I'm talking about. Okay, there's more hooks, but sometimes, just because momentum is low and makes a hook does not mean that it's good. What it means is that if it lines up where price is at support, resistance, if it's at that area and it's trying to do something, either make either I should probably edit that out, but I'm not going to. Okay, so momentum low, hook up, engulfing candle here, and market gave us our profit. Here's another one, and even though this one isn't quite as low, with the structure kind of outweighed that a little bit, but we still waited for the hook here. And again, I'm just going to travel through a couple of these for you. And this is what we do, man. We do this every day. So I'm going to show you a couple more. You can see momentum super high right here. We did come into a solid resistance all the way back to here. Okay, that was solid resistance. We had again a really nice rejection candle that lined up perfectly to momentum being high and hooking down. We got a 2.6 to 1 on that one. And this one over here. This one, let's see, what the hell did I do here? Oh, we had, see this one, the structure really outweighed momentum. And the structure on this one, we had a super nice 1, 2, 3, and it broke and closed below the 50. And we also had, momentum was down. It made the hook, and it's down here. Okay, so ultimately, it looks like it could be in a downtrend, but it was pointing down, and so that was my adjustment on the. It's not really an adjustment. It's a fact. It's just not super strong. That's all. You know, if it's really low or really high, that's pretty strong. This one just wasn't super strong, but it was in the direction that we wanted. Okay, move on. Canadian dollar, Singapore dollar. Here's one. This one's been pretty good to us. Oh, yeah. See the impulsive moves here? I'm going to do a podcast just on impulsive moves. I mean, look at this. We took this, what, 3 times? Twice? I don't know. Anyhow, here's a 3.2, one that we took recently. And again, here's momentum. High, and it actually is technically divergent, but it is hooking and it's to the downside. High hooking down, and that's what that gave us. This one we took a 3.5 to 1. And again, look at momentum, low, hooking high. And up here, we got in here, momentum high, hooking low. Just don't go against the daily momentum. I've learned that the hard way. Here we have divergent and hooking down and signals right in here. Okay, so that's kind of the lesson for the day here. If you have questions or anything, you know, I would love to answer them for you and do my best in doing that. My purpose here is to help you make money and improve my own trading ability and to share with you. I am fully transparent. I show wins and losses. I have nothing to hide. So I'm just offering a strategy that I developed over many, many years and many, many mistakes. So, all right, guys, hope you have a fantastic weekend. Oh, and by the way, the hook isn't the only thing we're looking for. The reason that we have the winner's edge is because we have alignment. That alignment consists of structure, price action structure, momentum, and the hook, and then also volume. And, you know, you just, the market will show you. It will show you. But you also have to have patience and you have to have bankroll management. Okay. So, all right, guys, that's all I have for you today. Again, this is the Forex Academy War Room, Winner's Edge, episode 8. And it's all about momentum and the hooks and my little tidbits. Okay. Have a great weekend, guys. I'll talk to you soon.